Welcome to the Sound Advice podcast. We are Citizens Advice North East Derbyshire. We focus on providing advice for people within the North East Derbyshire and Bolsover district and want to do just that with our podcast. Enjoy!
So hello and welcome to this episode of our podcast from Citizens Advice North East Derbyshire. I'm Ben, I'm Operations Manager, and this week I'm talking to Holly, talking about all things credit score, credit cards, things to be aware of that might give you a bit of an idea of the world of credit, just to demystify some of the things that you want to know. So I think it might be an idea just initially to give an overview of the difference between credit cards and debit cards, because that's something that we sometimes get asked. A debit card essentially means that a payment is directly taken out of your bank account, so it's immediately debited. A credit card is where you agree to pay later on. So you're given a credit limit, you use your card and you can pay up to that limit, and then you pay it off at a later date, either in full within the month or in instalments later on. So that's the basis and the difference between credit and debit. But if anything else comes up, we'll take it from there. And I suppose it's worth mentioning where credit scores come into this, because I know, Holly, you had a few questions about what is credit score, how does it affect your ability to borrow and things like that. So shall we start off there?
Yes. So firstly, what factors can affect your credit score?
Quite a lot, to be honest. A credit score is a record and an assessment of your reliability as a borrower and how trustworthy you are for someone who's going to lend you credit in future. So credit reference agencies, there are three main ones that operate in the UK. They gather different information from different sources. So they'll look at your address history, whether you have had different addresses could affect it, because if you look like you're moving around quite a lot, that could suggest instability in your lifestyle. They look at previous loans and borrowing history, how you've repaid. That adds towards your credit score. So if you have a history of making repayments on time and clearing your debts, then that means you're more likely to have a good score. Conversely, if you frequently default on debts, that drags your credit score down. And counter-court judgments, if you've had a debt that's gone really bad and your creditor's taken it to court to recover, that shows up as well, and that will negatively impact. And in the same way, any insolvency will be on your credit score, and that will bring it down as well. But on the other side, a history of good payments boosts your credit score. So it's rather perverse that to get a good score you have to take credit out, but that is how the system works, unfortunately.
So what are the best types of credit cards for people that don't have a good credit score?
The credit card providers can give cards for people with low scores designed to boost your credit score. So they probably have low credit limits, and it's worth shopping around really to see what the needs of you are and what you can get on offer. So you'll be looking at things like the interest rate, and APR is what will be given. So you might see a credit card with a 15% APR, and that means that 15% APR means the annual charges over the year, the cost of borrowing over the course of a year. That only applies though if you don't pay in full every month. So if you pay everything in the first month that you bought something, there's no interest added on. So it's all about shopping around for what suits you and who you can borrow from. What I should mention as well is if you are concerned about your credit score and boosting it, don't keep applying for different sources of credit, because that as well shows that you perhaps are in financial difficulty and that you're desperate to try and get hold of money. So that's something that is looked at, because frequent applications for credit will bring your score down.
So I know myself that obviously I'm a uni student, so I'm thinking about obviously getting a mortgage at some point in the future. So I know for things like that, it's good to have a good credit score if you want to get things on like finance or anything like that. So I know that I tried to apply for a credit card, and they said that I had 0% chance of being accepted.
Okay.
So what could I do now to increase my credit score?
So we talked about reliability, and an issue for a lot of university students is that you'll move around to different addresses. So if you're using different addresses to take out new bank accounts, to take out cards, or you're changing your bank account address, that will affect your reliability score. So it might be an idea to use your home address, where you'd go at summer if your family's at home, get your post sent there, sign up for anything at the same address. So it shows a measure of stability. Starting to pay off, not applying frequently, is a good way of doing it. Students are able to get a student account with a bank, which quite often will will have a 0% interest. So that will let you have an overdraft without any charges on during the course of your studies, perhaps in a few years after. What would be good to do would be to perhaps use that overdraft to make sure that you pay it off. Don't go wild and spend up to your limit, because then that panics lenders and it shows that perhaps you aren't responsible, that you're spending all the money and then you've no way to repay it. So it's being careful with borrowing. Going for a card such as a credit builder would be a good way of doing it. So not necessarily one of the top end credit cards with a high credit limit, and making sure that you pay for everyday expenses on it. So rather than paying in cash or by a debit card, you could pay for your weekly shopping on your credit card, as long as you pay it back ideally in a lump sum. But if you pay it back at least the minimum rate, you're showing that you are reliable and that you are sustaining the debt that you're taking out. And if you don't use up to the maximum of the credit limit, so if you've got a £3,000 credit limit on a card, if you're only using a third of it, if you're using up to £1,000 in any period, that again shows that you're not desperate for the credit. And again, this is the perverse thing, that the bigger limit you have is a good thing, but the less of that you use is better. So I looked at my credit score a few years ago. On one site, it was excellent. On another, it was only average, because it said that the credit limit I'd got wasn't too high, and the credit limit at that time that I'd got was just an overdraft, and I'd deliberately chosen not to have a big one because I didn't need it and I didn't want to get into it. But that suggested I may have been a risk because I wasn't trusting myself with credit. So that's the contradiction with credit scores, that the more you can borrow, you should borrow less of it, so that you're showing your lenders and the credit reference agencies you don't need it, but you can be trusted with it, if that makes sense.
Yeah. So what are some of the other benefits of having a credit card besides obviously being able to use it?
Yeah, so it's really good to have a credit card to make perhaps bigger purchases than everyday ones. So if you're going to buy something out of the ordinary, if you're buying a television, it's better if you're buying anything, but if you're buying something that is a major purchase for you that's not easy to replace, it's a good plan to pay on credit card, because you've got extra protections with a credit card. So if something goes wrong with the purchase that you've made, it's easier to recover directly via the credit card and their protection schemes than it would be you having to liaise directly with the person that you bought it from. You've obviously got consumer rights. We've talked in the past on these podcasts about your consumer rights, but it's easier for you as a customer to go for the credit guarantee that your credit card company will provide you with, and that's protected in law. So there's that protection, which is a massive benefit for people, and we'll generally say, if you're making a purchase like that, go through a credit card.
And then what would some of the cons be of having a credit card?
It depends on the person. So obviously it's a temptation to people because you've got a credit limit there. If you know that you can't spend within a limit, perhaps judge whether you should have one or whether you need tighter controls over your spending. That's not to say you shouldn't have a credit card, but judge what your credit limit should be. Are you getting a credit card limit that you know is going to be a temptation to you? If you've got a £5,000 credit limit, will you want to spend up to that limit and then not being able to repay it? So it can be costly. If you've got a credit card that you can't pay off, you're going to accrue charges if you can't pay the monthly bill. So the interest, that's where that 15% APR will come in, and some will be higher, some may be lower. So that is a con to having one. It's the cost of lending and borrowing. So if you're using it for your everyday expenditure, the difference between obviously paying on a debit is that the money's gone out your account straight away. If you're paying for your shopping over a credit card, you might be paying interest if you're not paying it back in a lump sum, so you end up paying more. On the flip side, another pro for it is that some credit cards do offer cash back. So if you use it for your everyday spending, you get money back from it. So it depends on your ability to pay largely. Don't take out money from them. Don't use it at a cash point, because that is expensive. That again is another expensive way of doing what you can do with a debit card. So if you use a credit card to withdraw cash, you can start accruing charges immediately on that, and they'll charge interest straight away. So it's just being aware of how you manage your lifestyle and your spending.
So for me as well, I mentioned obviously I've not been able to get a credit card yet, but on ClearScore, which is obviously the app that you can check your credit score, and mine says it's good. So I'm wondering, would there be anything else that I could do before applying for another one that would increase it? So I spoke to some of my friends and they've mentioned that potentially SIM-only deals on your mobile phone usage or paying gym memberships could help. Is that the case?
Agreements such as, it depends on how you pay in them. So a mobile phone contract is a credit agreement in a lot of cases because you have an agreement to pay over the course of 2 years, usually, what you could pay up front. So that is used to count towards it. If, for example, as well, you pay insurance, if you pay monthly premiums rather than annually, again, that is credit. So you, by paying off insurance, that's adding towards it. Not sure, to be honest, about gym memberships because you're not going to have generally a credit agreement with a gym. It might negatively impact because if you fail to pay, the gym might pursue you for the debt that you owe them. So you have a contract with the gym to pay a membership. If you cancel it, you'll be liable for the fees. And if they then decide to go through the county court to collect those fees, that could add on as a CCJ and add to the detriment of your score. So it could bring it down.
So would things such as Klarna or ClearPay boost credit? Because obviously you are buying things and then paying for them later, essentially. So provided that you do pay the money back, will that increase your credit score?
My understanding of Klarna is that there are a couple of different ways you can pay with that. I think there is pay within a month, pay in 2 instalments, or pay over the course of 6 months. Only the last one of those is a credit agreement, which essentially means that it's like a credit card but a store card. So failing to pay on that would affect your credit score. Paying it regularly would again show you that you're a good lender, that you're reliable. The first 2 cases wouldn't affect your credit score, so it's not a credit agreement. So if you failed to pay on something that wasn't a credit agreement, it wouldn't negatively affect it straight away, unless they did pursue you for that debt, they obtained a judgment and then registered it with a credit reference agency. So it's taking out credit to repay in that manner. So anything that is a credit agreement, that you have to sign a credit agreement, and it will be obvious, because they have to make it obvious, will help or hinder your credit score depending on how you repay it.
So if a person was in my situation where they're trying to do things now that are going to boost the credit score so they can get a credit card to further better the credit score, how long will it take before the things that you're doing to try and improve it actually have an impact on the credit score and your ability to get a credit card?
Depends on where you are generally with them, but if you say you're starting from scratch, I would be advising people to just check monthly on what the credit score is, in part to check that there's nothing incorrect entered on. So you can have errors corrected. You've got a right under GDPR. It's not just about data protection, it's about correcting information about you as well. So if you see something on there that you know is wrong, you've got a right to correct that information. So as well as checking your score, it's good to make sure that they've got correct information about you on. And if they've got a debt that you know you haven't got, you should get them to correct that. Things stay on your credit score for 6 years. So after that, if you have a bad score now and you start working towards improving it, the things that have happened today will have dropped off that in 6 years' time. It seems like a long time. In real terms, it's not. When you get to in your 30s, you realise that 6 years isn't that long. But I can understand how it might be panicking at the time. But creditors and banks, when they're looking at it, look at the most recent transactions. So if you've got back on your feet quite quickly after a blip, and it happens in life, you forget a payment, you miss a payment, people lose jobs, and for a period they're unable to make payments. Life happens. The sooner you get back on your feet, the better it looks for you for your credit score. So more weight is given to the most recent things. So if you've got a really good history in the last couple of years of paying things, but over 4 or 5 years ago there was a period when you missed a couple of payments, the creditors, the banks, mortgage lenders will look more at what's happening now, and they'll look at your ability to afford the loan that you're applying for, the mortgage that you're applying for. And it's all about the mortgage lender, the bank loan, as to looking at all those factors as well.
So if a person decides that they think a credit card will benefit them, what do they do now?
Shop around to make sure that what you're applying for is what you want. Make sure that your credit limit that you want is available for you. You can do soft checks on your ability, because you said yourself that you did a check to see whether you'd be approved. So that would be a soft check initially, as it's known in the credit scoring agency business. So a soft check just shows what your credit is like now and perhaps suggests whether the lender that you're looking at will be inclined to lend to you for that product. So a high risk product, perhaps with a high credit limit, requires a better score for you. So consider realistically whether where your score is now is you're able to get the thing that you want. Perhaps lower your expectations quotations, and again, prove your reliability with a card with a lower limit. But if you do those soft checks first, it doesn't show up on your credit score. If you go in to start applying for cards and get turned down, that will affect your credit score. It shows that you are, like we said earlier, starting to look for credit, and perhaps there's a reason that you are desperate to get credit, but you keep getting turned down. So be prepared in advance, know what you want, be realistic about your chances, and shop around for someone who has got a good level of APR. Check out what the minimum repayments are going to be for you every month, and think about what you need it for.
So when you apply for a credit card, what do you need with you? Is it a driving license or?
Quite often, the credit score in itself will do the identity checks. So that's why they will look at your address history, and they'll look at as well, if you're registered to vote, that could help you because it shows that you're flagging up on the system. If you're not registered to vote, that might suggest to a credit company that you're not who you say you are, and that you're going around trying to get credit. So if it's an online application, they may just use the credit check to check your identity as well and make sure that you are who you say you are, match the details that you're giving with the details that they've got on their history, which again is why if you're changing addresses more regularly, it might hurt those identity checks if you've moved around, because that might indicate fraudulent behaviour if you keep saying I'm from one address but you moved. So if you're a student, definitely use a home address for things like that so that it shows that stability and you're more likely to get the approval.
So just generally, what is APR and what impact does it have?
So the APR, as I said, it's the annual percentage rate, and that it includes charges that are on a card or a loan, and it includes the interest. The effect of it is how much you pay to borrow money and how much it costs you then. And again, how it impacts you depends on your repayment behaviour. So if you use your credit card 1 month to pay for, we said earlier, television, if you buy a £500 television and if you pay that £500 off, when you get your bill, you won't be charged any interest, regardless of what that APR is, because that's the terms of credit cards. If you pay within a month, you don't get charged. If you make your minimum instalments, so if you can't afford to pay the £500 and you pay off £50 a month as a minimum, then that's when interest starts getting added onto the whole amount. So you'll be charged an extra amount. So over the total, depending on how long it takes you to repay, you'll pay more than the £500 for the initial television. But the level of it does depend on the payments you make. So 1 month you may make a minimum payment of £50. The next month you might have had some income come in and you pay off £100. So you can't say for certain how much it would cost in total unless you know exactly that you will be making the same payments every month, and you can use that to work out. So if you simplified it from the 15%, if you say it's a 24% APR over the course of a year, that's 2% that you're adding on. So if you're paying £100 and you've got that 24% APR, it's 2% a month on that, so an extra £2 on the loan every month.
So if you mentioned that if you pay within the 30 days or the set amount, then you don't get charged any interest.
Yeah.
Is that then not the same as just having an overdraft that's not charging interest?
In some ways, yeah. I would always be more cautious about an overdraft, because if you have an account that your money gets paid into and you've got an overdraft, it gets used in that overdraft. So it gets taken first. So if you've got a £1,000 overdraft, you're £500 in it, and you get paid £1,000, your bank balance only then goes up to 500. So you could end up in a cycle where you're forever dipping into that overdraft and you can't get clear to start building up savings, depending on how much you're using of it every month and what your level of income is. With a credit card, it is separate. So you can, if you get into financial difficulty, you can make minimum payments towards that. You can prioritise your expenditure. You can do that with an overdraft, but it would mean opening a new bank account with a different bank to stop your money going into the one with the overdraft.
So essentially, you think it's better to have a separate credit card than to be using an overdraft?
What works for different people. If you are confident that you can manage your finances in using an overdraft facility, if it's only going to be temporary and you know that you need to use it, use an overdraft. If you think a situation is going to be ongoing and that you're going to rely heavily on your overdraft, do weigh up what the situation is. But then even in that case, if you know that you're not going to be able to repay an overdraft, is a credit card the best option anyway? Perhaps at that stage you need to get some advice and evaluate your financial situation. So work through a budget sheet, see what you have got coming and going out and why you might be struggling. So that would be the best course to take, rather than thinking, well, I know that I'm not going to pay, so I'll use an overdraft or a credit card instead of the other.
And if you apply for a credit card and you get one, are there any additional charges that you would need to be aware of?
They might get charged if you use it abroad, depending on the type of card that you've got. As I said before, you will get heavily charged for using cash facilities. So if you use it at a cash point, there are charges for that. There might be insurance as well. I know the PPE scandal happened a few years ago, but it can be quite a legitimate thing to have payment protection insurance on a card, as long as as long as you are made aware at the time you take the card out. That could be quite a legitimate thing. So check whether there is any insurance that you're going to have to pay on the card for any transactions, and any online overseas transactions might also attract fees for converting currencies. So if you're buying from sellers in Europe or in America and you've bought in dollars or euros, there might be a fee for transferring currencies. That also applies to banking and debit cards.
Is there any way that you can lower the interest rate, so basically the charge for using the credit?
Not once you've got one, because you've signed that credit agreement to say that that's what the interest rate is. So if you are concerned about the rate of interest, perhaps the best thing is to look at a different card. So if you've built up a better credit history, if you are now in a position where you could get a better rate, swap cards when you can. Some credit cards you can get which allow you to transfer. It's called swapping. So you swap your debt from one card to another without any charges being added on. But if you've paid off a credit card that has got perhaps a 24% APR, your credit rating is improved because you've been reliable with it. You might be able to apply for a credit card with a 15%, 17% APR, which obviously is a much better rate of interest for you. So again, it comes around to shopping around and seeing what's best for you and what you can get based on where you are with your history. And what I generally say is get advice about it, either from your bank. If you need specific financial advice, get advice from a financial advisor. If you're concerned about repayments, come to Citizens Advice and say, look, this is the situation I'm in. It's not the end of the world, a credit score. Yes, people want to buy properties and they'll need a good credit score eventually to do that. But as we've said, these things are temporary. And if it means if you are in debt and you really poor credit rating, perhaps looking at insolvency in the short term would be the best option. And then after your debts have gone, if you've gone through a bankruptcy, we've talked in the past with the debt podcast when the colleague Steve was on, if you go through a debt remedy, you can start from scratch and start building that credit score up using the tips we've used. So don't think that a poor credit score now or debt is the end of the world. Lifetime is a long time in a lot of cases, and you can start again and rebuild that. Thank you for listening to this episode of Sound Advice. If you've got any questions or comments, as always, feel free to drop us an email at soundadvice@nedcab.org.uk, or you can also follow us on Twitter at NEDerbyshire CAB. Thank you.